You're watching Metals in Motion. I'm Thalia Hayden with ETF Guide. We're glad to have you with us. Joining us now, John Ciampaglia, CEO of Sprott Asset Management. Welcome, John. Great to see you again.
Good to see you. Thanks for having me back.
All right, let's begin with Sprott's research team named uranium one of their top 10 themes for 2026. From your perspective, what's driving this surge in interest around nuclear power, and how sustainable is that demand as we look to the next decade?
Yeah, it's been a very interesting, I'd say, last 7 or 8 months in the world of uranium and nuclear energy. And we feel as though 2026, we're going to see kind of a catch-up trade play out in uranium after kind of meandering around for most of last year. And what's really driving it is this real big shift going on right now for electricity. And that electricity is obviously coming from things like AI data centers, which we know consume large amounts of electricity, but it's also, energy security considerations as the world is trying to become less reliant on others for critical things like electricity and energy. And this is really giving, I think, a lot of tailwinds to the nuclear sector, including in the United States, announced a very large public-private partnership that could see up to 10 new reactors built in the United States, which would be a real great milestone to kind of catch up with what's happening in places like China, which is building an enormous amount of new capacity.
Well, uranium supply has been tight for years now. Where do you see the most significant bottlenecks? Is it in mining, conversion, or enrichment? And how might those constraints shape prices going forward?
Yeah, I think it's all of the above. And I think that's why investors are looking at these market signals and getting interested in the entire supply chain. The U.S. needs to reshore a lot of critical mineral development. That's mining as well as processing. There have been some really interesting government developments in the last few weeks around something they're calling Project Vault, which is designed to incentivize more uranium production after a lot of it's been shut in due to sub-economic prices for many years in the past. And this could also involve stockpiling of strategic minerals like uranium, as well as helping to speed up the processing timelines for new mine permits, as well as investing in some of the downstream part of the fuel processing elements like enrichment. And so all these things are kind of happening at once. I think it's one of the key reasons why investor capital is really starting to come back into the sector. We've seen very strong inflows into a number of uranium-related ETFs in the last number of months, and I think that's a very bullish sign that investors are confident that this is not going to be a short-term transitory trend. This is something that is going to play out over many, many years as these investments are made.
Got it. Now, how much of today's uranium thesis is tied to geopolitics and energy security concerns, especially given the concentration of enrichment capacity in just a few countries?
Yeah, I think it's a huge consideration. We've never seen this much government focus on creating more resilient supply chains is the jargon they're using, which is basically means, becoming less dependent on other countries, because we have seen instances where commodities are being weaponized. And what does that mean? Basically, a country can say, I'm a supplier, I've been a supplier of this key mineral to you for many, many years, but we're not friends anymore, so we're going to restrict the export of a mineral, or charge you more for it, or create taxes and disincentives. So it's more difficult for you to have security of supply. That's clearly happening with things like rare earths, uranium, and this is why we're going through these, what they call Section 232 reviews in the United States, where they're basically assessing the strategic value or the strategic risks of being dependent on other countries. And uranium is one that has been identified, given the U.S. largely imports most of its uranium from other countries. And this is what I think is going to give uranium a big boost over the coming years, that governments are making this a strategic priority. We're even seeing investments in publicly traded mining companies, which is very novel for the government to take equity positions in these companies in exchange for future production. So they have security of supply, and there's some talk about the possibility of a strategic uranium reserve like we have with the strategic petroleum reserve in oil. So lots of really interesting things happening, and I think investors are getting very excited responding to these market signals.
Great. Now, switching gears a bit, John, SMRs, also known as small modular reactors, are moving from concept to deployment. How do you see this technology reshaping long-term uranium demand compared to traditional large reactor buildouts?
Yeah, I think it's one of the most exciting developments in terms of new nuclear energy capacity. And we see a lot of different applications coming. We won't see these new reactors turn on until around 2030, 2031. But there is a lot of pent-up demand and interest in this technology. These are basically some new generation designs. And who's really pushing this is you have some governments, including Ontario Power Generation, building the first 4. Tennessee Valley Authority has authorized the construction of a few of these. But I think what's getting most people's attention are the hyperscalers. These are the Googles and Microsofts of the world that are funding some of the new startup companies that are designing these small modular reactors. It's starting to get incorporated into some of the future demand forecasts, but it's still quite nascent, because the timeline to really deploy and scale the technology is several years away. But investors obviously are very forward thinking and looking in their forecasts, and they're just starting to see that this could create even more demand for uranium in the coming years at a time when we already have a deficit for the existing fleet of operating reactors. So this is something that we're watching very carefully. We're starting to get shovels in grounds, and this is starting to become more of a reality than a concept. So I think it's a very bullish sign, and it could play out for, again, many decades as the technology is scaled and deployed.
Wow, great information. John, one last thing before you go. From an ETF standpoint, how should U.S. investors think about the differences between uranium ETFs that hold miners versus those that track physical uranium?
Yeah, it's a great question. And I think most investors, they do their research on this sector, and they come to the same conclusions that we've had, which is this is very bullish, and the long-term fundamentals look very attractive. So how do I express my view? How do I put that into action? And there's 2 primary ways. You can invest in the companies actually producing and mining the uranium itself, or you can invest in the physical commodity, and you can do that with different vehicles out there. What we find when we talk to institutional investors is they tend to own a combination of the 2 in some kind of proportion, depending on usually relative value between the 2. Sometimes the commodity can appear cheap, so to speak, relative to the stocks, and vice versa. Our position right now is that the commodity seems a little cheap relative to the stocks. The stocks have had a really nice run over the last 8 or 9 months, while the commodity is kind of playing a bit of a catch-up trade right now. But most investors tend to own both together. The stocks can be somewhat more volatile than the commodity, but both, I think, have a role to play in a portfolio, and it really comes down to comfort level with volatility and risk.
Makes sense. John, thank you so much. We appreciate your timely insights. Keep up the great work.
Thanks very much.
And for U.S. investors, Sprott offers several ways to participate with ETFs linked to high demand critical minerals like uranium, rare earths, copper, and more. Just visit SprottETFs.com for all the information. And that does it for today's episode of Metals in Motion. I'm Thalia Hayden with ETF Guide. We hope to see you next time.